right, let's go. Here we go. Oh, welcome everybody that's joining up here. Can you guys let me know in the chat, please, if you can hear me okay, see me okay, things like that. Make sure the chat is working too. And we're just gonna go. We got about a minute here, and we'll let more people file in. But there's a good turnout for now, so a lot to cover. Thanks, Ryan. So thanks everybody for showing up here. There is me and Ryan on here talking, but unfortunately Ryan's camera's not working for technical difficulties. So unfortunately you get to hear his good voice, but you don't get to see his nice face. So but he's still going to give you all the information you need. So yeah, just everybody that's coming in, let me know in the chat. Make sure you guys can hear me and at least see one of us for sure. And then we can get going here in about a minute or so.
Is that the I have a face for radio? Is that
that's it? Yeah, Ryan has a perfect face for radio. I like it. Oh, what do we got in here? Oh yeah, that's a good. About 18 so far. There's a couple more still popping in, so we'll give them another minute here and then we'll get started. And again, thanks everybody. Thanks for taking time out of your evening to listen to our thing today. It's going to be chock full of a ton of information, so we got a lot of ground to cover here. We're going to try and get most of it done within the hour, and then a little bit of time after that for some questions, things like that. But yeah, we'll try and get through this as smoothly as we can. I got another minute. There's still some more coming in, so. Again, everybody that's filing in, if you're just getting in here, make sure you utilize the chat as much as possible. So as we go along, we are covering a lot, but there is myself and Ryan on here. So Ryan's going to be answering a lot of the financial questions. So if you guys have any questions at all, at any time, use the chat as much as you need. We'll try and get your questions answered as we go along, but if we can't, we do have a Q&A at the very end of this where we can answer everything we need after that. So so don't be afraid to answer all the questions you have. Like if it gets a little bit more specific, kind of tailored more for you, we do recommend you just book a call with us and we can do any one-on-one conversation we can have with you and help you out that way. So before we get rolling, I will put it in the chat here. That's the booking link. So if you guys want to get some more info, just personally one-on-one, that'll take you directly to my my booking page. That way you guys can pick a time and date that works for you and me, and we can have that one-on-one. So there's still a few more rolling in, but yeah, it's pretty good. We're 2 minutes past here. We'll get going right away here. So that's
looks like we got a great full group here, Andy. And
yeah,
as Andy mentioned, guys, don't be afraid to ask those questions. We want to make sure that we're getting you all the information that you need here tonight. And we're going to go through a bunch of stuff that we have prepared for you. But if you do have any questions that you do have, please ask away, and Andy and I will get those taken care of very quickly for you.
Perfect. Yeah, we'll start getting going here, but don't worry if for some reason, whatever, if you have to leave and you miss something, but you want to catch up, this is recorded. I will have a link to this, and then I'll send it out to everybody after. You're going to see an email come to you either tomorrow or the next day. You're going to get that, so no worries there. But yeah, we got a good turnout, so we'll get going here so we don't lose track of time. Again, thanks everybody for showing up. We appreciate you taking the time out of your day. And as you've seen the first message when you signed up, that we are giving away some stuff. So here's the first thing. This is a book that I have that I've got going on. I don't know if it's blurry on my screen or not, but it's a complete guide to buying a home. So this is chock full of some really good stuff on what it takes to buy a home that we're going to cover in this and some more. So you're going to get a free e-version of that, so you can read it online or on your e-readers, anything like that on your phone. Plus, there's a condensed buyer's guide that kind of just summarizes a lot of it into a quick little PDF format. So you guys are going to get that, booking the call link, and the recording of this. So that's what you guys are going to get just for being here today. So again, thank you for that. So moving on with this, since buying a home is one of the most expensive purchase majority of us make in our life, I would understand that this is a lot, you know, this resonates with a lot of people. So again, feel free, throw in the chat. Let me know if any of this resonates with any of you guys. And our goal, Ryan and I's goal, is to eliminate those by the end of this. And if not by the end of this, at least after, we can talk with you one-on-one and kind of make things go as smooth as possible. The reason why we do this is so we can basically make, for first time buying a home, a smooth transition, because it wasn't very good for me when I bought my first home. And now I've learned so much from them, and I just make sure not to repeat those mistakes. So yeah, we're going to do our best to eliminate these as we go along. So before we get into a lot of it, we are going to do some introductions, just so you know who it is that's talking with you. So I will be talking for most part of this, but Ryan's here too. He's going to answer a lot of questions. He'll do some talking as well. So we'll let you see who you're talking with. So I'm Andy Goddard. I'm a real estate agent. I started with Royal LePage back in early 2021. I since switched to eXp Realty at the start of January this year, and with them, I've helped so many satisfied buyers and sellers. A lot of first-time home buyers I've helped, which is great. I do service Saskatoon and the surrounding areas. I can go further out if need be, but I live here in Warman with my wife, my 2 kids, and my dog. So we call this place home. It's been home for since 2016. I've been living here, and yeah, we love it. We love this area. So that's where I service this area. I pretty much grew up in Saskatchewan my entire life, so this is a good place to call home. I am going to put in the chat again. You have my booking link there, but here's also a link tree address. This has access to all my business information. So my business Facebook page, Instagram, I've got TikTok, YouTube, and it also has my personal Facebook and personal Instagram, because I don't believe in hiding anything. So you can see who I am outside of the real estate side of things. So that's a bit about me. We're not going to have a whole lot of time to go through me, so that's fine. I am going to introduce you to Ryan though, and he's going to be on the finance side of things. So Ryan, go ahead, take it away.
Good evening, everybody, and thanks so much there, Andy. Yeah, Andy and I are proud to join this webinar for you just to go through a bunch of information. We realize that buying a home and going through that mortgage process, it's one of the biggest things you're going to do in your lifetime. That house is going to be the biggest asset typically you're ever going to have in your lifetime. We want to make sure that we go through and cover a lot of information for you today and really make that process very nice and easy and seamless for you. So I am Ryan. My apologies for the technical difficulties with my camera not working today, but you can see my beautiful bald head there on the screen. I work for TMG, the mortgage group. I have been in the mortgage industry doing this for over 20 years, and I am proud. I've been through a bunch of different scenarios. Please, you know, if you do have any questions, just throw those in the chat box for us. We're going to do our best to answer those quickly and efficiently. Don't wait till the end. If you do have a question that does come up, throw it in the chat box for us as well there quickly. So as I mentioned, I've been doing this for about 20 years. I've seen a bunch of different scenarios, from first-time home buyers to people buying cabins at the lake to newcomers to Canada. I am also very much Saskatchewan born and raised. I've been in Saskatoon my whole life, and I also serve kind of that Saskatoon and surrounding markets. But know that everything that Andy and I do can also be done remotely. We have the ability to really do a lot of things through e-signatures and phone calls and online applications. So, you know, don't feel that because you're not in Saskatoon for any reason, we can help you all over the place. So those are just kind of where the places that we call home. And of course, I do live in Saskatoon with my beautiful wife. I've been married for 27 years now, and my 2 wonderful sons, and look forward to help you out with your mortgage journey and your home buying journey. Back to you, Andy.
Awesome. Thanks again, Ryan, for that. Yeah, we pretty much work as a solid team here. I take care of the real estate side of things, and Ryan takes care of the finance side of things. Like I said earlier, we are here to pretty much walk you through this hand in hand, step by step, make sure this is a smooth process. And Ryan's one of the best at that, to make sure all the questions are answered and the process is smooth. So thanks. So that's the 2 people that are talking on here today. Again, I see we got some questions coming in. So yeah, Ryan's going to do awesome answering questions. Throw them out there as much as you can. And we're going to get rolling with this and move on, because there is a lot to cover in this next 50 minutes or so. So I'm just going to continue on with what are the steps to buying a home? So I always tell everybody, always get the most information you can. I wish I did before I bought my first home, but unfortunately I didn't. I'm stuck with the consequence of that years and years ago. But this is a good step. You know, we're going to try and teach you guys everything we can. So first thing I always do when somebody says, Andy, I'm tired of renting, I kind of want to find my own place, build an equity in a home, you know, be my own in my own space. I say the first thing we need, unless you have cash, is you need to be approved for a mortgage to buy a home. And that's where Ryan comes in. So I say, you know what? Yeah, we'll talk about some things, but I say Ryan's going to give you all the information for that, and he can get you a pre-approval. So we'll say you get a pre-approved for a mortgage. It's going to give me the amount that you're good for, right? The amount that you can be approved for, and that gives us a range. So then I'll sit down with you. I can give you a call, Zoom call, whatever. We can figure out what kind of a home that is going to be best suited for you or you and your family, right? Whether it's a condo, a townhouse, a detached home, whatever is going to fit the best for you. That's what we're going to start with. Then we can go into specifics like how many bedrooms and bathrooms, garage, yards, around schools, things like that, right? Find the perfect place that's going to fit for you and your family. So then once we have that determined, I'm going to jump on pretty much the MLS and start looking for homes. Find them in the range that we're looking for. And then once we get that nice list of places to look at, we're going to go house hunting together. We'll go check out different places, figure out what's going to be the best fit for you. And let's say we find one. Perfect. What we do is we go into the negotiation process. So I'll go back and forth with the sellers, and we'll determine a price. So once we get to an accepted offer where both the seller and the buyers are happy, we go into what's called a condition period. So I give about 2 weeks because it gives us a lot of time to satisfy these conditions. So the main condition is financing, right, for your mortgage. So it gives Ryan time to get your mortgage finalized, because right now you're at a pre-approval. Now that we have the actual amount that you need, he can go into the final approval and get that started. So it gives him a 2-week window to get that figured out. We also have time for home inspections and things like that. Whatever inspections we need done, it'll give us time to get that satisfied. Once those are all satisfied and we lift those, then we just kind of wait for the possession date. So in between lifting conditions and the possession date, you would find a time to sign up all your documents with the lawyers and get all the money transferred. And then we pretty much meet together at your place on possession day. So I'll wait till keys are released. Once I have the keys, I'll meet you there. And we do a very thorough walkthrough of the home to make sure everything's good, make sure there's no issues upon entering, because if there is, we can go back to the sellers and say, hey, look, this isn't quite right, and go from there. But once we're happy, we do a great walkthrough, you know, we take a picture, things like that. Everybody's happy and you're now a proud homeowner. So that is the steps of buying a home in a very, very condensed version, because there is actually so much that goes into this. But as we get moving forward with this and we work together, all this stuff will come easy. I'll explain everything to you. And yeah, we'll make this a very smooth process. The nice thing about this when you buy a home as well is that you don't pay realtor fees, and you also don't pay Ryan for his services either. So essentially, we are pretty much free to do this. Realtor fees come out from the sellers. When you go to sell your home, that's where realtor fees come out of. So yeah, it's really no cost to you to buy a home through us. That's kind of the nice thing. So we'll explain all that as we go along here, but those are the steps. So again, if anybody has any questions on those steps, reach out to me, book a call with us. We can walk through more of that, but we're going to get into the finance side of things now. We're going to talk about different programs that are available, the mortgage approval process, and I did see a question here, the benefit of a mortgage broker versus a bank, and I have a really, really fantastic story about that. So we'll explain all that as we go along here too. So there's always mistakes when you're buying your first home, and we always say mistake number one is ignoring the first-time home buyer incentive program that the government has on. Now, again, let me know in the chat if anybody has heard of this program that the government has put on to help first-time home buyers. How about now? Can everybody hear me now? Better? Might have lost it there. Okay.
Yeah, I think we got you back, Andy. I can hear you better here now.
Okay, where did I cut out at?
Only out for about 10 seconds.
Okay, Okay, sorry about that. I don't know if that was looks like an internet thing, but anyways, has anybody heard of this first time home buyers incentive program? It's quite a good deal that goes on that can help you out. If any, don't worry, we're going to explain it all, but some people have, some people haven't. So this is the basics of it. It's good that other people have, because then we can definitely go into more detail with it. So far, this number is a little dated now. This was, I think, from 2019, but so far they used over $1.25 billion to help make home ownership more affordable for Canadians. So what it is, it's a shared equity mortgage. So basically, the government of Canada is going to have a shared investment in the home value, both the upside and downside of it. So it's not interest bearing. You're not going to have to make any payments on the money they're going to give you, and it's repayable at any time without any payment penalty. Now, what it is they're going to give you an additional 5% of a down payment. Now, I sometimes don't think it's worded correctly, but I'm going to explain how this is very beneficial in a couple ways. But yes, they're going to give you help for a down payment. But first off, who's allowed to use this, or who's able to apply for this? So basically, anybody who's a Canadian citizen, permanent residents, non-permanent residents who are legally authorized to work in Canada can apply for this. If you are going in with a spouse or somebody else to buy a house together, at least one of you has to be a first-time home buyer. So if one of you have owned property before, but the other one hasn't, you can still qualify for this. If you're going in with a spouse or somebody else, as long as your qualified annual income does not exceed 120,000 a year, you can qualify for it. Anything over that, they feel you don't need their assistance. As long as the combined insured mortgage and incentive amount does not exceed 4 times the total qualified annual income, you're good. And the maximum down payment, including the incentive they give you, cannot exceed 19.9%. So what happens is, at 20% down payment and above, you do not have to pay CMHC insurance premiums on your mortgage. Anything under 20% of a down payment, you have to pay insurance premiums. And I'll explain more in a bit on why this isn't going to let you exceed that. There's also another first-time home buyers program to help with down payment too. It's kind of a little bit separate, but this is an RRSP program. So if anybody has RRSPs, you are allowed to withdraw up to $35,000 per person using this first-time home buyer program as well. So again, anybody with RRSPs, you are allowed to take those out and use them for a down payment. The only difference between this one and the other incentive is that you have to start paying these back within the first 2 years of using them, but they can be paid back in chunks, whereas the other incentive has to be paid back in one lump sum. So that's a bit different. Plus, the RRSPs have to have been in an account for 90 days minimum. Other than that, you're able to use those as a down payment if anybody has those, but I would recommend reaching out to whoever you have RRSPs through, and they can explain some more of that for you as well, but that's another option. So anyways, back to the first incentive. How does it work and when do you pay it off? So basically, you pay it off either if you decide to sell a home before your mortgage term is up, you use the proceeds of the sale of your home to pay them back. Any time during the 25 years of your mortgage, you can pay them back either by a lump sum, or you can refinance your mortgage. Or if you go all the way through the end of your mortgage term, pay off the house in full, you can pay them back again in a lump sum, or you can take out a small equity loan because you have nothing but equity in your home at this point. So you're able to do that. But those are the 3 ways you can pay it off. And I will explain as well why they want it as a lump sum, not as payments, which right away here. So here's an example of how this investment works and why and what you got to watch out for. So I like to use the $400,000 because it's just easy math. So at $400,000, the minimum down payment is required is $20,000. So basically, if at the time you buy it as 400,000 and 20 grand is your down payment, if your house value rises to 500,000 by the time you want to pay it back, you're going to have to pay them 5% of the 500,000 now, which would be 25,000. On the flip side is if your home value falls below that and it's at 300,000, you would only need to pay them back $15,000. So, I mean, it can get a little confusing there, but basically they're going to give you 5% of whatever you purchased the home at, and then you have to pay them back at the 5% of whatever your home value is at the time of paying it back. That's the investment, and they want to see their money grow just as much as we want to see your investment in your home grow as well. So that's just something to take a look at. That's why you can't do it in payments, because they need to know exactly how much your home is valued at that time of paying it back. So it's not just the money they give you have to pay back, it's the the extra value that they've increased over time as well. So just some things to think about with that. So I know a lot of people are going to ask, what's the value of this? If you give money, you got to pay them a little bit more back. So here's where the value lies in a couple of ways. So again, let's say you go to buy a $400,000 home, you need a minimum down payment of $20,000. Now what they're going to do, for $20,000, you're only going to have to borrow $380,000. So that's the most you're going to have to borrow using your own down payment. Now, when the government kicks in and gives you $20,000 as well, they're going to double your down payment, which means now you have $40,000, which drops the amount you need to borrow to $360,000. And your mortgage insurance premiums also drop. So at 5% of a minimum down payment, the mortgage insurance premiums that are all-time high. When you put 10% down, those premiums drop, and at 15,000 they drop, and then 20,000 there are no insurance premiums, right? So this is basically going to help you by lowering your mortgage insurance premiums, and it's also going to allow you to borrow less money, so it's less payments a month. That's the one way this benefits you, is less payments a month. The other side that it helps you, which has helped a few first-time home buyers as well, is that instead of using it to double your down payment to borrow less, it adds more to your down payment, so it pushes you up to a higher home value. So let's say you had $10,000 saved up, which is the minimum for a $200,000 home. They give you an additional $10,000 that adds to your down payment, which now gives you a $20,000 down payment. Well, that brings up your minimum down payment to a $400,000 home. So there's two ways that this can really help you. It's either it gives you double of a down payment to get you into a bigger home with the minimum down payment, or you can do it for less amount to pay per month. As long as that makes sense to people. There's the two benefits, and it has helped a few people. Given more of a down payment gives them into more of a house, helps them at the start there. So that's where the benefit of this really lies. And yeah, it's if you want to learn more about this incentive itself, I would definitely reach out to us. We can definitely give you all the pros and cons of it, and see if it would even make sense to use it for you to help you out at all. So again, I'm going to put it in here. Here's a book a call link if you want to know more about that. But if anybody has any questions on the incentive, please let us know in the chat and we can definitely answer those. But that's it's definitely beneficial if you need to use it. But again, if anybody has any questions, we're going to move on to what the approval process looks like and what's needed for that. And then and Ryan's got some pretty cool stuff he can share as well. And so, yeah, as I mentioned before, not getting a pre-approval is a huge thing. So in order to buy a home, you have to have mortgage approval. That's just, unless you have cash, that's pretty much how it works. So what are the ways that, what do they look for? What are things that they need? So there's definitely three things that are looked into for mortgage approval. And first off is credit. They want to know how good is your credit? Are you able to pay everything off? How good is your debt, right? So what they want to see is for a credit score of around 620 to 650 is a good starting point, right? Then they want to look into make sure that you don't have like 20 credit cards that are maxed out, or you have 4 vehicles that have payments on them, right? They're going to look into your income to debt ratio, make sure that everything lines up and you're okay, right? So the credit is a big one. Make sure that they know that if they lend you money, you're going to be able to pay it back. Second is they're going to look at your income. So for majority of us, they're going to want to see at least 2 years worth of income tax statements to see kind of a baseline of how much you bring in a year. Or if you have a salary position, that's even better because we can get a letter from your employer and they can tell us exactly how much it is you make, and so we can use that as well. So that's a couple things. There is also a program that Ryan's going to get into to help people that are new to Canada that don't have that 2 years history, and Ryan's going to get into that in a little bit. But that's kind of what they want to see with the income. So they're going to take your credit, your debt, and your income. They're going to make sure everything matches up there. And then finally, they're going to look to see how much of a down payment you have, because that also is a big factor as well. Sometimes the amount of down payment you have saved up limits you to the house, right? You could be approved for, let's say, a $500,000 home, but you only have enough saved up for a $300,000 home, right? So they're going to look into that, where it come from, things like that, right? So those are the 3 main things they look for when it comes to mortgage approval. And so, yeah, basically they are underwritten. So once we get into it, once we find a home, it gets sent off to the underwriters, and what they're going to do is they're going to review your income and your credit and your down payment source. But the perfect thing about these is they're reliable, and it tells you the maximum amount that you can purchase. So when you have that and you bring it to me and say, Andy, like, this is what we're approved for, fantastic. Now we know exactly how much we can go up to in the area we can shop around in, right? So that's a huge deal, especially if somebody wants to look at a $500,000 house but finds out they're only approved for 350, 400. Dropping down from 100,000 is really hard to get into, back into the fun home buying process. So we want to just eliminate that and find out exactly how much we can go with and go from there. So it's a huge thing to get mortgage approval. And again, you book a call with us, Ryan can go over everything with you. He can give you great advice on what you need to do going forward, or if you do, perfect, and he can get you started on the right path. So yeah, that's kind of the three basics of mortgage approval. Now, I did mention earlier there is a new to Canada program, and this is something that Ryan's really great at. We've helped quite a few people with this, so I'm going to let Ryan take the reins on this and explain this new to Canada program. So go ahead, Ryan.
Thanks so much, Andy. So again, New to Canada is one of the programs that we do see a lot with Andy and I. We do a lot of New to Canada applicants, and we find that this is a huge program that our Canadian government has put in place to really help our newcomers coming into the country. One of the biggest segments of the first-time homebuyer market and one of the largest drivers of housing growth in Canada is the new immigrants that have recently come into Canada, and more specifically into Saskatoon. Lots of people used to come into the Toronto and Vancouver markets and couldn't find work and couldn't find affordable housing. Just to let you know as well, Saskatchewan has the most affordable housing across Canada. By a long shot. Our average price here is about $350 compared to $700,000 or $800,000 or $900,000 in the Toronto and Vancouver markets. So some of the most affordable housing in the country, and we're seeing a lot of new immigration coming into Saskatchewan. Our government and mortgage lenders also do realize and have developed specific programs for our newcomers coming into the country, knowing that most people coming here do not have credit established. They are fairly new to the country as well. So, as you can see on the screen, there's some great benefits to using a New to Canada program if you are a newcomer to the country. So, right, the first point on there, immigrated to Canada within the last 5 years. That is a requirement of the mortgage default insurers with the government. So if you've been here longer than 5 years, what they kind of figure is that you've been here long enough to establish your credit history and get that permanent residency started. So this is for people that have immigrated to Canada within that 5-year mark. Again, we realize that you're going to have limited credit history. With what we do have as options is down payments that really can factor in well. The 5% down payment options you'll see down there are still a great option for you as a newcomer. What we can actually use is alternative credit options instead of you having long-term established credit. So as you can see on point number 2, you can actually use Canadian bank statements, rental payment histories, and utility payments as credit support. So if you have only that minimum 5% down payment, what the program requires for a New to Canada program is 12 months worth of two alternative options, usually 12 months worth of a rental payment history. So if you pay rent, we will look at a 12-month history of that, and any other utility payments. So that can be a power bill, that can be Sask energy bill, that can be a cable bill to Shaw Cable, that can be a SaskTel bill, an SGI bill, a plate, an SGI plate bill, anything that shows a structured payment for 12 months plus 12 months rent. That's what we can do with 5%. Now, if you do happen to have a little bit more down payment at 10% or more, and just to kind of segue in, we've just talked about the first-time homebuyer incentive. You can actually use your own 5% plus the government's first-time homebuyer incentive for the other 5% to get to a 10% down payment very quickly. Now, when you get that 10% down payment, the options are a little easier for you. So at that point, at a 10% down payment, you only need to show 6 months worth of a bank reference letter or bank statements showing that you've handled your primary bank account well. So that's simple. Most of our newcomers coming into the country are very patterned into setting up a bank account very quickly with a financial institution as soon as they land. And lots of them get credit cards set up right away. So usually once you land and you have that bank statement or that bank account open, 6 months worth of those statements and 10% down payment, we can get you quickly into a home. That's simple. Point number 3, permanent residency and work permits are both allowed. That's one of the biggest questions I do here on this program is, I'm here on a work permit. Does that count? Can I still get into a mortgage? Absolutely. So if you're here on a permanent residency status, perfect. That works great. That's kind of the top of the board. But know that if you are here on a work permit as well, that also can be used under our New to Canada program and absolutely counts. The only one that really doesn't under our government New to Canada programs, if you're here on a student visa, unfortunately, you do need at least 35%. We can't use the government insurer programs for that. So student visa, we do need quite a bit more down payment. But if you're here on a work permit or permanent residency, 5% down is all you need to get into that home quickly. As I mentioned, down payment options as low as 5%. So if you got that good Canadian credit history established, or 12 months worth of a rent and utility, 5% down payment will get you into a home very quickly. If we can bump that up to 10%, that timeline goes down to 6 months. So really, really quick stuff there. And just to finish up and reiterate here, the government first-time home buyer incentive, the FTHBI for short, those grants are absolutely available for our newcomers to Canada as well. Get you that extra 5%, gets you into a home even quicker, in combination with your first 5%. So hopefully that helps out. I know that we do deal with a lot of newcomers to Canada. And if you do have any further questions, just throw this in the chat box. I will be happy to keep going through those for you, and looking forward to helping you out. Back to you, Andy.
Thanks, Ryan. Thanks for that. I did realize I forgot to mention back in the previous slide here that for down payments as well, because I know it's always been a hot button issue with a lot of people I've talked to, especially people that are renting, things like that, right? It is a little tougher to save up some days, but there's three to four ways for a down payment to work. You can either use your own savings. There's 2 is using that RRSP program that I spoke about earlier. And then there's a third way, which is what we like to call the bank of mom and dad or an immediate family member. They are able to gift you a down payment, and you can use that as well. There is a 4th version, but it's more inclusive, I guess. If you are part of the Métis Society of Saskatchewan, the Métis Society does have a first-time homebuyers grant, and they are giving up to $15,000 for a down payment. So if anybody's part of the Métis Society and wants to look into that, definitely reach out to the Métis Society and or reach out. I do have some of the information on hand I can email you too, but that is definitely an option. I know a few people that I've talked to have been looking into that, so that is an option as well. I did see Rona here say that the city of Saskatoon is also offering a down payment grant. I honestly haven't heard of that myself before. If I haven't at all. Ryan, I don't know if you have either, but I haven't heard of it yet. So it may be something to look into here, but that's just a new one that I've never heard of. But we'll definitely look
the city of Saskatoon doesn't have a down payment grant. There are programs with some of the builders that do have a first-time homebuyer incentive with them. New Rock is one. Some of those programs do exist. The city of Saskatoon unfortunately doesn't offer a grant, neither does the government. That grant is really offered at a national level. Yeah, that's just those are about the 4 ways to get a down payment. So that's kind of, and when we do say the bank of mom and dad or get it as a gift, it does have to look as a gift. There is a letter they're going to have to fill out to show that it's a gift. But again, on a side note, if you choose to pay that money back to whoever gave you the gift, that is between you and the person that gave it to you. But you just can't tell the lenders that you're borrowing it from your parents or a family member, because they're just going to act or see that as more debt. So just a couple things to look out for. But if somebody's willing to give you some money to help you out with the down payment, definitely reach out to us. We can definitely see if we can make that work for you. And then moving on a little bit more, I have had this question before.
about a cosigner. So sometimes if you're a first-time home buyer and your credit's not quite there to help you out, a cosigner is an option. So basically you can use anybody, like a close family member can be a cosigner for you. They just have to also reside in Canada, have an income of some sorts, and also be able to be approved for a mortgage, but they can be a cosigner for you. You can still use a first-time home buyers incentive program while using a cosigner. You just have to watch out that you and your cosigner don't go over that $120,000 a year annual salary to be able to qualify for it. There are risks for a cosigner. Obviously, the cosigners take on the risk that if you don't make the payments, they're going to be liable to make those payments as well. So there is risk to them. So we want to make sure everybody's on the same page with that. But really, they're committed to being a cosigner for you for as long as you can't be approved on your own. Once you're able to be approved on your own, then it's simply just get the title transferred back over to your name, and it's just some legal fees that come with that. So a couple $100 just to get that transferred over, but it's pretty simple. But if you think you need a cosigner or think it's going to help you, definitely again reach out and we can see if that's going to be something that you need or not. But that is an option as well, just so you guys are aware of that. So the last, I see there's some, keep the questions coming, everybody. We're going to do what we can to answer most of them. We'll keep moving because there's a lot to cover. We're already a half an hour in, so I got to keep rolling here, but keep them coming. We'll try to get them as best as we can. So the third and final thing with financing is using your bank. Now, I do remember there was a question about, is there a benefit to using a bank versus a mortgage broker? And yes, there definitely is, and I will explain why. Oh, this has happened to me recently. I want to say in August/September. It was what you call a disaster. So a little disclaimer before I get into this. There's nothing wrong with using a bank. Everybody uses a bank. I use a bank. I use RBC myself just because it's local here in Warm, and I think they're great. They handle my checking, savings account, TSFAs, and things like that. They're great. So there's nothing against bank. My dad's a general manager of the credit union in small town Maple Creek, where I grew up my whole life. So again, there's nothing wrong with them. It's just, here's a couple things that happened with us. So I was dealing with this awesome couple. I helped them sell their home and bought them a new home because their family was growing and they grew out of that home. So we sold their home, got an offer on it, accepted, and things like that. So we started the house hunting search. I asked them, who's your mortgage through, and they told me what bank they were using. I can't say what bank it is just for liability purposes, but they were using a bank, and it says, no, our bank has been great to us. They've always treated us well, so we're going to stick with them, even though Ryan could have got them a cheaper rate and less payments, but they were still happy with it, so we went with it. Back in August, this was July, August, when the market was insane, where there was multiple offers on pretty much any home you looked at. So we were in a multiple offer situation at 7:30 at night. Well, everybody knows that there's banker hours, right? So at 7:30 at night, there was no way I could get a hold of them, and I needed to get a hold of them because I needed to see if there was an approval for a bridge loan, which basically just allows them to take possession of their new house before the sale of their current house goes through, because they're going to use the sale proceeds of their house to fund this new one. But anyways, long story short, they just needed a bridge loan to get them over that hump for about the 2-week span that it would take. And I just needed confirmation of that. But at 7:30 at night, when you call their bank, you get the same pre-recorded message. Hey, the bank hours are from 9 a.m. to 6 p.m. If you leave me a message, I'll get back to you within 1 business day. Well, that's pretty useless when I need answers now. So it ended up working out. They accepted our offer anyways, but under the impression that the next business day we get confirmation of that bridge loan, which we did, which was fine. So everything was good. Like I mentioned before, when we're in the condition period and it gives them time to do financing, I do not lift conditions and go to a firm sale of the home without confirmation from whoever is providing the funds. So when I work with Ryan, which I do quite a bit, and Ryan says, yep, financing is approved, you're good to go, I get that in writing in a letter stating that the financing is approved for sure, and then I lift conditions. Well, this guy did send me an email saying, yeah, go ahead. I emailed him back, said, so we are good to lift conditions. He says, yep, here you go. They're approved and things like that. So I lifted conditions. Fast forward to about a week before possession date, when they were scheduled to meet up with the lawyer, and the lawyer hasn't heard of any word from the other side yet, or from any mortgage instructions yet. which made me concerned because the lawyer they use is a guy I know really well, who I recommend a lot. And I texted him and says, have you heard anything? He says, nope. So then it kind of got me panicking, and we looked into it, and it was a disaster. They did not finalize their mortgage. It was a fight. We ended up having to rush into the bank at 3 in the afternoon, and we were in a manager's office for all the way till closing time. And the only thing they kept, instead of admitting fault to it, they just said, you know what, we can't really do anything about this now. Sorry. It was a disaster. So basically what happened is, because they didn't provide the correct mortgage instructions, or whatever they didn't do, or process the mortgage properly during that period, their interest rates, that was during the time when the interest rates were really rising. So what happened is that the interest rates rose so much, it kicked them out of the amount they were approved for, because they didn't process the mortgage. And it pretty much essentially kicked them out of that home that we bought, because they couldn't afford it anymore. So now they've sold their home, which they don't have a house to live in the next couple of weeks. They don't have a house they're able to buy right now, and they just have a brand new baby and a 3-year-old daughter, and they're almost going to be pretty much homeless and lose their $7,000 deposit, because they can't proceed with the sale because the bank has refused to help them out in any way. What happened was Ryan was on his his anniversary with his wife out in Italy, which was awesome, but I wasn't able to use Ryan to help bail us out. So unfortunately for him, we weren't able to use his services, but I had another colleague recommend me another mortgage broker, and she managed to actually pull the deal together in the right amount of time. And it actually worked out, and it was perfect, where the bank was saying, no, we can't do anything for you. Sorry about your luck. A mortgage broker came through for us and actually saved the day, and I owe her quite a bit for that. So not saying this happens with every single deal with banks. I just know that these are things that can happen with banks. Or you can't get a hold of them when you need to. You can run into some major issues with them. So this is why it's so good to use a guy like Ryan as your mortgage broker, because he is great and he will answer questions at any time you need. So here's some, again, more reasons why it's so much beneficial for you. Ryan has access to over 30 different lenders' products that he can shop around for to find you the best rate and deals. He works the same hours as I do. So basically, if you have a question at 8 o'clock at night, fire me a text, fire him a text, give him a call. He'll be able to answer those questions for you anytime. We're pretty easy to get a hold of and help answer questions. He'll offer you the best mortgage rate up front right away. Again, it works for you and the best interest of you, as do I, and his service is free. You can call and text him anytime with any questions. So he's so awesome to get a hold of, right? It's so helpful. Whereas the banks, they're restricted to their in-house product. They work their normal bank hours, and anything after that, good luck getting a hold of them. And let's be honest, real estate works usually in the evenings and weekends, because that's when everybody else isn't working. So we need them at those times, and they're not around. They also offer bank posted rates, so you might need to negotiate a better rate. And some people just don't like negotiation. That's what I'm for, right? And they're more of a personal broker, and they kind of work for the best interest of their employer more than, from that last experience I had with them. Definitely it seemed like they were more in the interest of the bank than it was his client. So it was pretty bad, and they're definitely a lot harder to get a hold of. In that scenario, I could show you on my phone. In the 3 days we were trying to fix this, I probably called him about 100 times, and I'm not even exaggerating. It was probably 100 times, and he answered 3 of those calls. I was definitely not happy about that whole situation. It was awful. So this is a big reason why it's so beneficial to use a mortgage broker like Ryan. He'll give you the best product he can get you, the best rate he can get you, and he's there for you for any questions you need at pretty much any time. I'm not saying that if you call him at 3 a.m., he's going to answer you, but in the evenings when we need him, it'll be a big one. So mistake number
You'd
2.
be surprised. I'm a light sleeper, Andy. I'm always here for you guys.
With that being said, I wouldn't recommend calling him at 3 a.m. though. But if it's a emergency, like, oh my God, then yeah, we're not going to give you, if we can, we're going to give you all what you need. So yeah, you definitely won't get that, hey, call us during 9 to 6 p.m. right? It's like 9 a.m. to 6 p.m. It's not like that. So that is, again, I just want to
got a quick question here, Andy. Can you reiterate what mistake number 2 was? I just have a question in the chat box from
that was
Ifyalua here.
Yeah, that was not getting a pre-approval, right? So I've had it before, especially when, the last little bit when it was crazy, people were like not worried about getting a pre-approval. They just wanted to go house hunting. But without getting a mortgage approval, mortgage pre-approval, it's unless you have cash on hand, it's pretty much impossible to buy a house, right? You need that mortgage approval. So that is the biggest mistake. And because sometimes people think, well, I can afford about a $500,000 home. Let's go look at those, and then find out they can only get approved for $300,000 or $400,000. It's a lot harder to get back into the excitement of buying a home, because going from 500,000 to 400,000 is a huge drop, and it's kind of disheartening when you get into that. So we tried to avoid that. So that was mistake number 2. But yeah, again, with all this, definitely reach out to Ryan for any finance, any mortgage questions you have. He definitely can help you out. Again, I'll put the booking link in here again. Book a call with us. We'll set aside a time to have a conversation and go from there, right? So it's definitely beneficial to give them a shout. And then the last and final thing about this is, if people's lives change a lot, right? And most people that buy their first home, that's usually never their forever home. Not saying everybody, nobody stays in them, but most of us use the first home to start building equity. And then you grow into it and your families get bigger, right? And so it's not your forever home. So there's a good chance you're going to move out of your first home earlier than waiting the 25 years to pay out your mortgage, right? So there is payout penalties sometimes when it comes to paying out your mortgage early. Bank penalties can be quite expensive. Ryan at least can give you a heads up on what payout penalties look like. He's going to try to see if we can get a little to no payout penalties. We can't guarantee there's none, but we want to make sure you're aware of it, whatever life decisions are, whether it's you need to upgrade the home because you're outgrowing it, and whether you're downsizing, whether you're, new job loss, moving out of the country, whatever the reason is for moving out of it, we want to make sure it's a smooth process and you know exactly what goes into it. So that's a big thing that Ryan can do for you, is at least, give you that information up front, right? So that pretty much takes care of most of the finance side of things. I know there's a lot, and we're trying to, about 15 minutes, so I'm gonna have to rush through my real estate side of it, which is fine, because the financing side is a major one. So again, keep throwing questions in the chat. Ryan's still here. We're gonna be here all the way to the end, so I do need to keep moving just so we don't go way over time here. But I'm gonna get into the real estate side of things. So the mistake first thing on the real estate side of things is buying directly from a builder. So I really don't touch a whole lot on new builds, just because majority of people that buy their first home is usually a resale home that's already lived in, right? Not very many go for a brand new build, but because it's an option, I just want to touch on it a little bit. So I find builders are a lot like banks, right? Where they're going to, sell you their product and their product alone. Whereas I can take you to all the different builders and show you all the different builders' products and find what's best suited for your family, instead of just what the one builder has. I can also recommend the good builders and the bad builders. Again, can't name drop that because it's recorded and I don't need that phone call. But there's just some things to watch out for it. Again, as your realtor, and Ryan as your mortgage specialist, we work for you as a client of ours. We want to make sure that your best interests are the first and number one thing, whereas a builder really wants to sell their product more than anything. So it's best to bring me along with you. I can show you all the different options out there to see what's best for you guys, and also watch the contracts that they provide, because there are some builders out there that have in the contract. So let's say you bought one for $500,000 as a random number. There's a clause in there that if materials go up, the price of materials goes up, like lumber and all that, that the price will adjust with that. So if it goes up 25%, that your purchase price can also rise as well. So we want to make sure that's not in there. The other thing with builders is when it comes to negotiations for a price, they usually don't like to budge much on their price, because if they have a whole street full of new builds, if you start negotiating price on one, it just starts an effect of all the other ones going down in price. So they want to stick pretty much right on that price. But what I can do is negotiate like appliance packages and basement packages and things like that. We can negotiate more of that stuff in there just to give you kind of a break on some things. And also we can also look to see how much their packages are, and maybe there's a chance we can do it cheaper with other services and other construction people, right? Make sure there's a better option out there for you. I also have had people ask if there's a difference between going straight to a builder or using a realtor to buy the place, and there is no difference. It's the same price whether you go straight to them or bring me with you, because they know that majority of real estate agents sell their homes, so they kind of build their fees right in there, right? So, you know, you get a whole bunch of knowledge. You got somebody who's on your side to make sure you're getting the best deal out there for you and your family. So again, I don't touch a whole lot on this, but it's just some things to look for, right, when it comes to new builds. So if you want to learn more about that, reach out with me, and then we'll definitely we'll talk more about that. If anybody got any more questions, keep throwing them out there. I gotta keep rolling here. So one of the other major things to watch out for, as I mentioned earlier in the conditions period, is skipping a home inspection. So just for curiosity out there, does anybody know roughly the price of a home inspection for, let's just say, a normal detached home in Saskatoon? Just throw a number out there, see if we're close. Bang, that was a good one. Yep. So 500. That's pretty close. So that's some good guesses there. So for a normal detached home under 2,000 square feet, I know a guy that I recommend highly. He's great with first-time home buyers, because I've noticed a lot that some home inspectors make everything sound like scary and, oh, this is awful, where he's really great at explaining that it's not bad. It's just maintenance things to worry about. So he's $425 for a normal detached home. Gets cheaper if it's a townhouse or a apartment style condo, but he's $425 plus tax. There's some that are $470, some that are close to $500, right? And I mean, this is something that is highly recommended, not skipping, or highly recommended to, not to skip. It's such a massive book of knowledge, and it one of the biggest purchases of your life. If you're spending $200,000, $300,000, $400,000, $500,000, $400 to $500 is a drop in the bucket to have, the clarity on how well your home is, right? And these guys don't miss a thing. I know the guy that I recommend, he doesn't miss a thing. They'll check everything from electrical, plumbing, all your utilities. They'll check everything they can pretty much see that we usually don't see. So when we're looking at houses, you guys would be looking at the layouts and how big the bedrooms and things like that are and what you like about the house. While I'm on the background kind of looking at other things, making sure there's no damages that aren't really that obvious, right? Things like that. But these guys will come in and just do a full detail inspection on these houses. They'll look in the attic, make sure there's no mold or anything like that. They have technology to see through the walls to see what the insulation is there, see if there's any moisture damage, any mold. It's crazy. And so that's why it's good to find a good home inspector that's not going to just make it sound all doom and gloom when they find things wrong with the house. And every house that I've come across, you're always going to find something little, at least something little in every house, because it's like buying a used car, right? They're going to show you what maintenance you have to have on it, and you don't need to be done now, but it's, in the future, make sure to watch this, right? So he makes sure that it's, oh, don't worry, this is fine. You just got to watch this later on and it'll be fine, right? But what these are really good for is to find any major deficiencies in the home, right? And so the beautiful part about these home inspections, and they're a condition built into the contract. If this is not satisfied, we walk away and go find you a different house. Now, personally, myself, I have yet to come across a home deal where a home inspection was so bad that we walked away from it. So personally, myself, I haven't ran into it, but I have a colleague that just had one recently, that home inspection done. They found a ton of mold in the attic once he stuck his head up there. And I ballparking the number they said was about 20 grand plus. And they just because of the mold, they didn't even want to consider it. So they walked away from it, which is fine. Walked away, went and find a different house. But that was somebody else, not me. So I can't speculate much on that. But myself, I've been through a ton of home inspections. They always find something. But if it's majority or a safety issue, we definitely can either go into negotiations again and drop the purchase price to let you guys handle the repairs, or see if they can fix them prior to possession date. A couple examples is a house I did. It was in the electrical panel. The dryer was supposed to be on a two breaker with a pole in the middle, so that if the breaker trips for whatever reason, both breakers trip. Well, this one was on two single ones. So if something happened with a dryer and it tripped a breaker and only one of them tripped, now that dryer is running on a half power, which is a big safety concern considering that heating element that's in there. So that was a big safety concern. So we went back to them and asked them to get a certified professional to provide receipts and proof that it's fixed it, and showed that he did. So they showed us pictures and the receipt that it was done. There was also another one that in the bathroom, the exhaust fan to suck out all the moisture from the steam from the shower, bath, whatever, is supposed to be sucked out through the roof and out the vent. But what happened when he stuck his head up in the attic to see it, the vent pipe was a little bit off. And so half of it was vented to the outside, the other half was vented into the attic. So when you're getting that moisture in there, that's more concern for mold. And especially in the wintertime, you get frost buildup in there. So we had them get a professional, get in there and fix it, and they were able to do that. So it's things like that we can do to make sure the home is ready for you guys to move in. And all the major concerns are either fixed or taking some off the purchase price to help you guys out with it, to fix it later on if needed, right? There are a lot of things, so some of it is just going to be maintenance things to look for. Even my own house, when I had my home inspection done, we found out during the inspection that our main ensuite shower was leaking into the main floor bathroom, just a very slight drip. He caught it with his little camera that showed that there was water damage, so we ended up just sealing it up with more caulking, and it was fine. But if I didn't get that home inspection done and that drip got worse and worse and worse, that water damage would have been astronomical. So home inspections are super important. It's something I really don't recommend anybody buying a house without one, in all honesty, just because there's so much to this house and you want to make sure it's good and solid for you to buy, right? So that's just some things to think about. So it could cost you a lot of money if you move into a house without a home inspection, you find out there's a ton of damages you need to fix and work on. So again, do not recommend skipping them. Again, it's not mandatory. It is entirely up to you, but it's just, I would not feel comfortable not getting these done, in all honesty. So I did see there were some questions there. We are kind of running a little, I'm just going to run through the last little bit here, and then we'll get into the Q&A here, and I'll wrap this up. But again, thanks, Ryan. I see you're answering some questions in there still. I'll get to what I can here. So the last one we're going to touch is condo review documents. This is called the estoppel or a Schedule C. So this is for anything that you're buying that has a condo board attached to it. So you're looking at apartment style condos, townhouses, half duplexes, even some regular detached homes are now having a condo board attached to it. So basically, if it has condo fees and there's a condo corporation attached to the building, it's going to have this estoppel package. So this works just like a home inspection. It's in the conditions, but with these, they are mandatory in every deal. You are to get one no matter what. The only thing that's not mandatory with these is that you get a lawyer to look at it. But again, I highly recommend that it gets sent to a lawyer for them to look over with. I know my lawyer that I recommend to people usually doesn't charge you to do this as long as you do the whole deal through him. And he's really great. So I can tell you what's in this. I just do not have the qualifications to explain if it's good or bad, right? That's what the lawyers will do. So the main one that's in these condo review documents is what's called a reserve fund. So that's the amount of money that they have saved up to fix any of the common areas or the common part of the building, right? So like boilers and roofs and things like that. That's the money they have set aside to fix major repairs and things like that. So if there is none in the reserve fund, they do what's called a cash call. So just for an example, let's say there's a condo building with 20 units in it. The roof has to be fixed. There's no reserve fund, and it costs 100 grand to fix. They're going to come to each and every condo owner and ask for $5,000 of their own money to pay to fix it. So that's just something to look out for. So that's why we want to send that to the lawyer, and the lawyer is going to be able to look at the reserve fund and see how much is in there. It'll also see what needs to be fixed and what's been fixed. And things like that to make sure there's enough in there to cover any costs that are coming up, and also to make sure that the condo fees and the percentage of the condo fees are going into the reserve fund and it's the correct amount. So it's very, very important, just so you don't want to move into this and all of a sudden you get what's called these cash calls, right? So we want to make sure that's covered. It also has a big list of bylaws. So depending on the property, right? Every property is different. Every condo is different. There's bylaws that you can and can't do with your property, right? So some of them are restricted on the different type of renovations you can do. I know I looked at a condo with a client of mine and he hates carpet and he wanted to rip out all the carpet and put hardwood and laminate down. But the bylaws stated that you cannot replace any of the main area with laminate or hardwood. It has to be carpet just because it's an apartment style condo. And a lot of the residents complained because once people ripped out the carpet, it took away that sound barrier and it got really loud for people underneath them. So that bylaw was you cannot replace that flooring unless it's carpet. So things like that, because it could cost you a lot of money if you go in there not looking at that and start ripping out and gutting the place and find out that you can't do certain things. Well, it's going to cost you in the fines that they're going to give you and to redo all that work. So that's a big thing to look for. Also, another one was we looked at it and the balcony outside was looking in really rough shape. So the wood was rotting out, the metal railing was starting to rust away. But we looked in the estoppel package and it noted that they were aware of it and they were going to start fixing them, and they're going to be done within 2 years, starting with the worst ones and going to the least worst, but fixing them all, replacing them all. And there was enough money in the reserve fund to fix it. So it's just a good thing to know. It tells you everything. It tells you what condo fees are, how much they are, what they cover, how much goes in the reserve fund, all that. It's just, it has all the history of the condo building in there, right? So it is a good thing to have. But again, I highly recommend you get it sent off to the lawyer once we get it. That way they can let you know if it looks good or not. So again, it could cost you some money in the long run if you decide to do renos or things like that the bylaws aren't allowing, and you just have to pay the fines and redo all the work that you paid for. So it's just good to have a lawyer to review it. So that pretty much covers the majority of the things to look out for when it comes to buying a home. I know there's a lot of things that go into it, like all the contracts, but if, you know, once we get down to that part where it comes to signing contracts, it is a lot that goes into it. But what I recommend we do is either I'll sit down with you and I can go over every contract in detail side by side, or we can get onto a Zoom call and I can share my screen and show you all the contracts live, and we can go through all of them too. So that's something else we do for you as well, to make sure you know exactly what it is you're signing and that you're comfortable with everything, because it is a big thing. So that pretty much wraps up most of it. We are pretty much bang on right on time. I did have to rush you that last little bit, but now we're kind of into the Q&A side of things. So again, thank you everybody for showing up for this, hearing us go on about this. I hope we eliminated some concerns and stresses for you. I know there's still a lot to go with, but again, we're here pretty much to make sure this is a smooth process. And yeah, like if you go to book a call, this is a screen you'll see, and so it'll pick a time and a date that works for you, and it's free, and then we'll be able to have that set in there one-on-one, and no worries. So I will start scrolling back. Ryan, if you want, go ahead, you can jump in and answer some more questions. I'm going to scroll back to see if there's anything I missed. And again, feel free everybody to you know, throw some questions out there where I'll stick around. Ryan and I'll stick around for a bit answering any questions anybody has. So feel free.
Thanks, Andy. I've actually been going through, I think I've got most of them covered already. Just kind of a few still coming in here at the end. So yeah, keep these questions coming, guys. Now that we are finished the presentation, I'll just kind of talk to them instead of typing them in. So I just got a great question from OS. Thank you so much for that great question. Can we use the incentive with down payment of more than 5%? So underneath the government regulation, we do have to have these incentive deals approved by a default insurer, so with CMHC. To be able to do that, the down payment that CMHC typically is involved with would be 5% up to 19.9%. So as long as we're within those guidelines, that 5% to 19.9% down payment, you can use the incentive. If you do have 20% or more down payment, unfortunately, the government thinks you probably don't need the extra incentive. So if we do get 20% or over, unfortunately, you can't use that first-time home buyer incentive. Hopefully that answers your question as well. I did get a question here from Petro. Are you going to be talking about rental properties? We don't talk about rental properties specifically on this webinar, Petro, but we absolutely do. You know, not only do we help you find that program for, you know, those properties with Andy, but we can do mortgages with them on my side as well. So, you know, when we do talk about rental properties, those are typically for a little bit more sophisticated home buyer, but we can absolutely do that for you. Please reach out to Andy and I, and we will go over the rental options, not only that we have on the property side, but on the mortgage side for you as well. So yes, absolutely, we can help you with that rental stuff, Petro. Please reach out to Andy and I for that. This question here from, sorry, go ahead, Andy.
Yeah, sorry, I was going to answer this one from Ellen. Is it okay to have more than one realtor or mortgage broker? And I'm going to be I would say blunt as I can. To me, it's not, just personally, because us realtors, we don't get paid until the home closes. So if you're sending 3 or 4 different people out to drive around showing you a place, but you're not really committed to one, it's not really beneficial for any of the real, not just myself, but to all of them, right? It's basically, you work with one, they do their best for you. If it's not working out, that's a totally different story. But to work with more than one at the same time is really not very fair to most of them, right? Some people might be okay with it, but I know a lot of ones that I work with are, if they find out that they are using more than one, I've had that conversation before with other ones, and they just decide, you know what, not gonna, do this, because it can be sometimes a bit of a headache that way. So I would recommend that whoever you decide to use, you stick with them unless they're not actually performing the way you want to. And then that way you have a conversation with them, and then you can definitely go about finding somebody else that can. But yeah, no, I really wouldn't recommend going more than one at a time, in all honesty, just out of fairness to everybody. Yeah,
I
hopefully.
would kind of second that. Yeah, I would second that as well, Andy. Alma, it's about establishing a great trust relationship with your realtor or your mortgage broker, choosing one that you really have a great relationship and that trust built with. We look forward to earning that trust from you and helping you any way that we can. When you do kind of spread it out, it can get a little convoluted for yourself as well. So, we want to make sure that we're doing our best for you, and and that we have all the information from you that we can. If you're kind of spread out and you're using, possibly from a mortgage broker end, if you're using multiple brokers and we end up sending to the same lender for some reason, that can actually cause a lot of conflict with that lender as well. So we want to make sure that you're choosing somebody that you really, that you bond with and trust. We want to earn that trust from you, and then kind of running that course with that realtor. And we said hopefully that'll be Andy and I, and we're going to earn that trust for you. But yeah, I recommend not using multiple people. There's no advantage to doing that for you.
Yeah, thanks, Ryan. Yeah, exactly. Yeah, and that's what our whole goal is too. Is that we're here to earn your trust and make it a fun transaction. So that's the whole point of this. But yeah, there's where else we got here.
I think the next question I think we've got here, this incentive has to be returned to the government, or is it a privilege? Yeah, great question. I think Andy mentioned this. So this is actually a grant. This is money that it's not given, it's not a gift. It is a 5% equity position that is technically borrowed, interest-free from the government. And it's based on the 5% of the home that you purchase today. When you repay that back to the government, it does absolutely have to be repaid back. It is based on 5% of the value of the property at the time you pay it back. So you borrow 5%, you pay back 5%.
And yeah, again, I explained, yeah, and you only have to pay it back in one sum, either when you sell the house, use the proceeds of the sale, use your own savings for it down the road, or refinance your mortgage, or at the very end, you can just take a small equity loan out of your home because you built up equity in it. So there are some options there to pay it back as well, instead of just trying to save up for it and pay them back at once. But yeah, great questions. Is it going to be who pays for services, buyer or seller? Yes, majority of the time the sellers are the ones who pays for our services, for mine for sure. So basically, if you buy a house, you don't have to pay anything for realtor services. However, when you go to sell your home, that's where the services come out of. And then if I go to sell your home, what we do is we offer, a certain amount for a commission, and then I split that commission with another agent who brings a buyer right down the middle. So it's kind of an incentive for them to bring buyers to us. But that's usually how it works. The only time that I've ever seen where a buyer pays for realtor services, and it doesn't happen very often, but it can happen, is that if we're finding a property that's off market, so not being listed by another realtor, let's say for sale by owner, and that seller just absolutely refuses to use or to pay for any realtor fees. Doesn't happen very often, but it can, and they just absolutely refuse, but you're in love with the house, then we'd have to have that discussion too, just because doing the paperwork, signing all the contracts and things like that, there are risks to it, obviously, and we have to have, there is actually from our brokerage, there is a minimum that we need to charge just to cover costs of any kind of incidences that can happen, right? So, but that's a super, super rare occasion, doesn't happen often, but in most deals, it's the sellers that cover the realtor fees. What else do we have here? What is the ideal minimum income to apply for a mortgage? Again, I'll let Ryan take over that, but it so varies from person to person, right? All depends on your debt ratio and things like that. But Ryan is way better explaining that than I am.
You bet. I actually just put that in the chat box. Thank you so much for a great question, Viria. You know what? There really is no ideal minimum income. It's about really going through, reviewing your employment and your income amounts, but it's also having a look and, you know, seeing maybe you don't carry any debt, so the income that you do have would qualify for a larger mortgage. Typically, the numbers that they tell us as far as what the government qualifications are 44% of your gross income can go towards your total debts, including the mortgage. So whatever that mortgage amount would be, the taxes, interest, and heat on that on the property, plus any other debts that you do carry, credit card debt, car loans, things like that, can't be more than 44% of your gross income. It's kind of a good number to use. What do we got next here, Andy? If the value of the property increases after 5 years, for example, we should pay back 5% of the value at that time, or just the amount that was borrowed? Yeah, another great question, Alma. Yeah, with the incentive, I'm guessing that's what you're talking about there. So with the incentive, you do, it's based on 5% equity position. So if you borrow, say for argument's sake, the property value would be 5%, the purchase price would be $100,000. You would borrow $5,000 at 5% at that time. If the value when you paid it back had increased to say 200, you would pay 5% of the 200 back when you repaid it. So keep in mind, it is an interest only grant, so you don't pay interest on that money, but you do pay based on the 5% when you sell it. So if the property value goes up, you would pay 5% of the increased amount. If that property value does go down, you would pay 5% of that decreased amount as well. So know that if you are paying a little bit more, it probably means your property value has increased substantially, and you're probably making money off of that property as well.
Exactly, yeah. And then there was another one here, just a follow-up question for the incentive. The incentive is capped at 5%. Yes, it is capped at 5% for resale homes. If you put 10 to 15% down, they're still only going to give you 5%. They're not going to match your exact down payment because it cannot exceed that 20%. They're only going to give you 19.9% at most, because they're not going to let you exceed the insurance premium. So the only time I've seen 10% is only on new builds. So there is a chance they can give you 10% on a new build, but 5% is capped on resale homes.
We got another question here, Andy. Is $50,000 a good income to get into real estate in Saskatoon? I'll tell you right now, again, income really depends on what you're looking for, what sort of a house you're looking for. What we do is review that income. It really depends on your debt load, Andy Pam. It really depends on what sort of a property you're looking at. We just did a home between Andy and I that the gentleman had an income right around this mark, and we got him into an absolutely beautiful home. So there are definitely properties in there for people with a $50,000 income, for sure.
And what's
that? Give us a call. Click on that link, and let's get that review done and start the process for you.
What's that adage they've been saying lately was don't wait to buy a real estate, buy a real estate and wait. So that's always a good one. Here's that link again for anybody. What percentage of property price can be negotiated? Great question too. It all depends. Every home is different. We look at a lot of things like days on market, how good the house, like how updated the house is, things like that, right? There's so much that goes into it. Lately, you're seeing it, again, it all depends, but like lately, usually you see around $10,000 at most off of the purchase price of a home. I know lately it's getting a little different now because the market is starting to see a shift. So you're seeing more negotiations coming in. But again, it all depends on the property. Some people don't want to, it also depends on the sellers too. Sometimes it depends on the seller situation. Some are either, they don't have to sell, they don't really care to sell, they just want to see what they can get for it. So if you send them a low ball offer or a slightly or quite underneath asking price offer, they might just say, nope, I'll wait for something else to come in. Some of them are really needing to sell, so we can see what we offer them, right? It all depends on the property, or it also comes down to, what it looks like it needs to be fixed, right? If there's a lot of work that needs to be put into it, then we definitely can negotiate. But a lot of the times, running comps of other houses, people are, most agents are really in the ballpark of what it would be valued at, but there is always room for negotiations, for sure. Like I just got over one that we did a deal on. The house came up right at like 0 days on market. There was multiple offers on it, but we still ended up getting it for, what did we finalize at? 8,000 under asking price, and that was first day with multiple offers on it. That was a little different. It was a full cash offer, so cash sometimes always wins, but we were still able to negotiate. So those options are always out there. So that's where I come in, and we take a good look at the place and we figure that out.
Know that Andy's the best on the market, guys. He will absolutely find you the best property, negotiate the best with that seller to get you the best deal on the market, guaranteed.
Here's a really good question. So I've heard that there's some shady areas in Saskatoon where it's not recommended to buy a house. I honestly, I can't. There's a thing because real estate agents, in a sense, control can control the market, right? It's not like we go out of our way to do it. It's just, if all the agents say, hey, do not buy in this area, it really affects things. So we're really not allowed to say, hey, no, you can't buy in here, right? But it's like every city, there's always areas you want to be aware of, right? But everybody's different. Honestly, the shady areas that have been mentioned a lot, I helped a client buy one almost a year ago now. It was in December of 2021. What do we got? 22? Yeah, December of 2021. They bought a house in what you would call a shady area, if you want to call it that. But he bought one. They've been living there for a year, and he says he hasn't had any issues. His neighbors are great. He's had so it all depends, right? And I honestly, I'm not allowed to say it, but yeah, I understand what you're getting at. And we always take a look at what it is, how much can you afford, and we kind of try to find you the best fit for you guys. So it's definitely things we're going to sit down and talk about anyways and go from there. This is hard. Yeah, it definitely is hard for me to answer that question. Well, that's a good one here from Ralph. Yeah, I'll let Ryan handle that one.
Perfect. Yeah. So the question here from Ralph: my spouse usually pays the bills, and I'm a first-time home buyer. I'm also listed on the bill, but my spouse pays. Can I qualify for the grant? I guess the question I would ask you, Ralph, does your spouse own the home, or do you currently rent? If you're both currently renting, and you or your spouse have not owned a home for 4 years, then yes, you would qualify for the incentive. If you or your spouse have owned a home in the last 4 years, unfortunately, you would not qualify as your spouse. Yeah, if you're both currently renting, absolutely, that would make you a first-time home buyer for sure. So if you or your spouse have not owned a home in the last 4 years, you would absolutely qualify as a first-time home buyer. It's not about the power bill that you pay at a rent. It's about owning a home. So you would absolutely qualify. Yep. Another question here from Moez. Thank you so much. We are 1 month old in Canada on a permanent residency with a decent job in hand. How much time should we spend before making a purchase? Yeah, great question. So you're really kind of the prototypical new to Canada client that we talk about, Moez. So what we would really look at ideally is probably getting a minimum of a 5% down payment from you. If it's only 5%, I would likely pair that with the first time home buyer incentive to get you to that 10% down payment mark. At that point, what we would need from you and your spouse would be your 6 months worth of a bank statements in a Canadian account. So wherever you bank, get me 6 months of statements showing that you handle your monthly obligations well through your bank. And that's typically enough. So 6 months worth of bank statements will usually get you in. So 1 month is still a little bit fresh. We do need at least 6 months credit with a 10% minimum down payment. So let's get that process started for you and have a look and really analyze that. Usually, you said if you're here for 1 month, probably about 5 months will be your buying window, sometime likely in April or May of 2023 would be perfect for you.
I don't know, Ryan, I might have missed it, but did we mention about the 90 days too for down payments? Did we mention that? I can't remember now.
I don't think we did cover that. Nope.
Okay, so that's another thing too we've noticed as well, or it's the thing to note for anybody that's new to Canada as well. If you have money coming in from wherever it is that you're coming from, in order to use that money for a down payment, it has to sit in a Canadian bank account for 90 days untouched. So let's say, just for an example, you need $20,000 to use for a down payment and you're bringing it over from wherever. Once you start bringing it over, the full 20,000 that you're going to use has to be into an account and start going for 90 days. You can't just keep bringing chunks over at a time, because every time you bring more and more over that you're going to use, it just restarts the counter. So that's what we recommend if you have money coming from wherever it is that you're coming from, to get all that over as soon as you can to start building up that time to sit here. We worked with lots of people from Nigeria, I think South Africa, things like that, right? And so they'll bring all that money in, but we always say just get it here as soon as you can and get it to start getting that 90 days started. So that's a big thing to do.
Great point, Andy. I've got a question here from Alma. Do you recommend applying for a mortgage these days because of the high interest rates? Great question, Alma. And may I ask what the best interest rates that you can get on the market? That's a fantastic question. Rates are a really hot button topic lately. We've really gone from a market where rates were at their all-time lows during COVID in the 2020s and 2021s. We saw rates, under 2%, Alma, to be honest with you. We've never seen rates that low. We likely will never see rates that low again. It was really, the government dropped rates down that low, and they did across the world in world markets, really to counteract COVID and make sure that economies stayed running properly. So what we're seeing is a bit of a correction now. We're seeing rates that have moved up substantially, kind of up about 3%. So we are kind of seeing rates right at about that 5% mark. Right now currently. So we've kind of seen, that low point in interest rates during COVID in 2020 and 2021. We've kind of seen a bit of a crest when rates are peaking a little bit now, but we have some great options going there. I mean, right now we're actually recommending the variable rate is a great option as rates do start to normalize. Typically a normal rate, in Canada is about 3.5% to 4%, somewhere in there is about a normal average normalized rate. Right now we're about 5%, so we're a touch high, but we are going to see those rates starting to come down over the next year and normalize. So a variable rate will capture that downside and your rate will drop as the economy does improve. Now, the other side of that is really getting into housing is so important to do that now and not wait. And the example I always give is, if you're paying rent and you're paying rent to a landlord, rent is 100%. 100% of money going directly to your landlord. None of that is going into the equity. So if you say pay $2,000 a month in rent, over a year, that's almost $25,000. That's money that you could be putting into your own mortgage and your own equity. So if you take just 1 year of about $25,000, plus we say, normally an average home in Saskatchewan goes up, Andy, about 2 or 3%. So if you're looking at, a $10,000, $12,000 lift on pricing per year, plus $25,000 that you put into your mortgage, you're looking at a huge equity position that if you stay renting, you don't get that, right? So you're giving that money all to your landlord. So the quicker you can get in, start to build up your own equity, I recommend it. I know that rates are are definitely a little bit elevated. The variable rate does capture that as it goes down, Alma, but getting into housing as soon as you can get in, it is always my recommendation. I want to start putting that money into your own pocket as opposed to just giving it away to your landlord.
100%.
Great question.
100%. Yeah, it's always, if you can do it, I always say, you know, if you can do it now, because it's better to start building for you than paying off somebody else's mortgage. So yeah, definitely a great question. There's another good one here. Is it possible to get a decent house under 250K with some rental potential? Now, does that mean you're thinking of buying it with able to rent like the basement out while you live in there, or an actual full rental property? There's, I mean, either way, there are some good places there for under 250K for sure. Yeah, if you're looking for you know, basement suites and things like that, absolutely. It just gets a little bit difficult. You know, at 250 and down, you're kind of looking more towards the west side of Saskatoon, right? But there are some good options out there, definitely for rental income and things like that. Yeah, so I can definitely, you know, even I can show you a bunch that are out there right now available if you want to. I can take a look as well. But yeah, no, we just got to figure out what your budget's going to be, and we can go from there. Oh yeah, it all depends on exactly what it is you're going to look for. Yeah, like, I mean, keep them coming, guys, if you got them. But yeah, like Ryan said,
We get a pretty intuitive group here tonight,
yeah.
Andy. I love all the great questions, you guys. This is fantastic.
But yeah, like, it's great. And yeah, like, we did want to reiterate, we did spoke about this earlier, but yeah, like Ryan mentioned, like, the rates got a little high there for a bit, but even then we're still around the historic average, right? And so they're going to start coming down again, which is fantastic. So I mean, if you're really on the fence about the whole house buying thing, definitely reach out. We can give you some really good insight on what's going on. Ryan can run some numbers for you and give you a good outlook on what's going on. But it is definitely 100% always better to be paying into your own mortgage than it is to be paying some landlord's mortgage, right? It's just always has been. I mean, there is benefits to renting. It's definitely putting a roof over your head, but that's pretty much about it. And I've had a ton of phone calls the last couple of weeks, last couple of months, honestly, of people that are renting and are just tired of it, because you get the same story that in a few months, rent is going up. My rent is going up. I can't do this anymore because I hate that my rent's going up, and they've, you know, it's hard. And so, you know, that's what we're here to help you guys out with. So yeah, it's definitely a good time.
Well, the other side of that, Andy, too, and I think you really touched on it there. With rates a little bit higher, your landlord is probably paying a little bit higher mortgage rate on his property as well. And what he's going to do is pass those costs on to you as a renter. So as mortgage rates are a little bit higher, he's going to raise your rent to cover those additional costs. So, you know, we want to make sure that you're putting that money into your own pocket, not into your landlord's, because you know, he isn't going to lose money. He's just going to charge you a larger rent.
That's right. Yeah, absolutely. He's not going to take the hit himself, right? But yeah, that's another good question too. Would you recommend a first-time homebuyer to go with a condo or a house? And again, that's pretty much actually just preference, right? It all depends on, you know, what you can be approved for, what your budget looks like, what it is that you want, right? I know some people that never want to buy a house because they just don't want to deal with the maintenance, like the yard maintenance, snow shoveling, things like that, right? They like the fact that a condo takes care of that. They can travel because they like to travel, right? So they like the fact that they can travel all over, come back, and their place is all taken care of and there's no worries there, right? But some people don't like the condos and being cooped up in condos and like to be in their own house, do what they want, right? So again, it all comes down to preference. And yes, condo fees are a thing. Yeah, some are big, some aren't, right? I know I've been looking at a lot of condos lately, and I know that like they're hovering around, well, it can be anywhere, but you're around the 350 mark roughly for condo fees, depending on the price point and things like that in the area. But yeah, they do come with a condo fee. So again, that's something that comes with mortgage approval too. That's definitely something we could talk about as well, is that if you go, let's say you're approved for just a number of $300,000, we find a condo that's $300,000. Well, now we might have to look at how much are condo fees, because that's also going to affect the purchase price. And Ryan can definitely touch more on that too. But that's just something to watch out for, right? Right now, I know that like apartment style condos, they are definitely saturated on the market right now. They are, you know, it took me quite a while to sell the one that I had, but we did manage to sell it, but it just took a little longer than normal, right? Everybody just going into the houses, right? So it's but right now apartment style condos are on the low end. So if you buy into those, which I have a few people right now that we're actually looking at those style of condos, one is to get in them because they're at a low point right now. So try and get them at the cheap point, and that way they can rent it out, and hopefully they come back on a rise, right? So that's the idea, right? But definitely houses I find appreciate a little bit more than the condos do. But again, it all just comes down to your personal preference, right? Some people just like attached townhouses. They think they're amazing. Some people like the detached. Some people like apartment style condos. So whatever your preference is, right? Yeah, if you guys, yeah. Well, we can discuss it a lot too, like in way more detail. I know we're getting to about 8:30 here. I mean, keep the questions coming. If anybody has any questions on it, keep it going. I'll put it, if you guys haven't already, I'll put it in here. That's a link again, just to book a call with us. We can talk more for whatever it is. Go, feel free. Definitely open and discussing everything. But yeah, really a lot of good questions here, you guys. Keep it coming if you have any. Yeah, this is great. It's a great session. Yeah, but if
I'm not
not,
seeing any more questions coming through
no.
here, Andy, but I mean, we do have our link on there. You know, if you do have anything that you think of after we get off the call, guys, reach out, you know, get something booked, get that conversation started with us. You know, I've got a lot of questions here on things like pre-approvals and incentive. Let's have that conversation, you know, one-on-one. Reach out and talk to Andy and I. Let's get that process started and really get you all the information that you're needing to get you into a home quickly. We're looking forward to help.
Oh yeah, absolutely. So as I mentioned before too, guys, no worries. You're gonna get an email within the next day or two here. You're gonna see the book and the buying the condensed buying version. Also, you're going to get the booking a call link will be in this email, same with the recording of this. So if you want to go back and look into it or see more and kind of reiterate on stuff, it's going to be there for you too. And again, best thing is you can do is just book a call with us. So, but thank you guys and everybody for showing up. One more question here. Does the money that we get from the bank for the mortgage, it goes up or down with the value of the house too? Are you, no, that's just going to keep going. That's just going to keep
Yeah.
going down as you pay it off, but I'll let Ryan run with that one.
Yeah, great question, Alma. So yeah, when you borrow, so I mean, for example, if you borrow $200,000 in a mortgage from the bank, as you make the mortgage payments on that mortgage amount decreases until it's paid off. Usually the lifespan of a mortgage is about 25 years. You can pay that off earlier if you like. Usually it's about a 25 year. It's called amortization, is the lifetime of your mortgage that you'll pay, that it'll take to pay it down to zero. But yeah, it does pay down. It does not fluctuate up and down. It will continue to go down. You borrow a static amount, and as you make your mortgage payments, that amount on your mortgage decreases until it goes down to zero. The big thing is the rates. The rate amounts are set in terms, usually between 3 and 5 years. So each 3 to 5 years, you would renegotiate the rate that you're paying, and you would pay that. The lifetime of your mortgage would be the amortization. Usually it's about 25 years. Hopefully that helps.
And the beauty about that is, let's say you buy today at $200,000 and 10, 15 years down the road, you paid half that off already, but now it's worth $300,000. You just gained 200,000 worth of equity in that home. So that's the beauty of it. It's not going to, as your house value goes up, your mortgage isn't going to increase or anything like that. It's just going to keep going down as you pay it off. So that's the beauty of it. Your payments are, if you lock in on a 5-year fixed term rate, your payment's going to be the exact same for the 5 years, right? If you do the variable, then it fluctuates a bit, but I mean, that's just, it's not going to increase based on the home value, right? It's just going to be what you borrowed at that specific period of time. So yeah, absolutely. But yeah, again, thank you guys and everybody for coming out. I think it's a great time to wrap this up anyway. So if you guys have any more questions, again, don't hesitate to reach out to us. We're happy to answer questions at any point in time. Even if you want just more information about what you think you need to do going forward, give us a call. We can help you out and get the process rolling, whether it be now or in a few months from now, whatever it is, we're here to help you guys. So yeah, I want to thank Ryan again. Thanks for being here and thanks for answering questions for us all. We'll be in touch as always. And yeah, that's about it for us today. So thanks again, everybody. Enjoy the rest of your evening. And yeah, we'll talk soon. All right. Thanks, guys.
Thank you very much, guys. Have a great night. Looking forward to talk to all of you soon.